program, I've talked to many esteemed economists, but few with keener insights than the Harvard historian Niall Ferguson. I spoke with Niall recently about the crisis and also his fascinating new book with its grand title, The Ascent of Money, A Financial History of the World. Welcome, Niall Ferguson. Niall, when you look at the history of financial times, struggles, how bad is the one we're currently in?
We are now in a financial crisis that bears comparison with the Great Depression. Nobody should have any doubt about that. The difference is that we're adopting very different monetary and fiscal policies to try to repress that crisis. That's why I would call it a Great Repression. But it is potentially as bad. We're not out of the woods yet, and it seems to me that we're looking not only at the biggest post-war recession, but potentially also at an extremely slow, long lost decade. It's something that nobody...
Sort of like Japan in the 90s.
That could be a good scenario. If you think of the Great Depression as the worst case scenario, we would be getting off lightly if we can get by with a decade of 1% per annum growth. So at the moment I'm really quite apprehensive that the process of deleveraging has far from run its course. There's no floor in sight in the real estate market. And these things have a self-perpetuating quality. One of the lessons of history is that depressions tend to feed on themselves. There is, after all, a psychological dimension to this. Once people get really spooked, it's very hard for the market to find its bottom. And remember, stocks sold off between 29 and 33 by nearly 87%. So you have to have a sense of orders of magnitude here. Financial crises happen infrequently on this kind of scale. And that's why we need to have historical knowledge to have an understanding of their dynamics.
If you want to look at the nightmare scenario, the Japanese people initially pretended they had no problem in the 1990s, but 2 or 3 years into their crisis, they injected capital into the banks, they cut interest rates, and they had massive fiscal stimulus, all the things that we're doing. And it didn't work.
The most you can say is that they avoided a Great Depression. I mean, they ended up with very low, almost zero growth for a decade. But, that's a better scenario than what happened in the 1930s. Let's not forget that in the 1930s, the United States, and for that matter, Germany, saw unemployment of 25% of the civilian workforce, and output contracted by roughly a third, by roughly 30%. So if you compare a depression with a stagnation, you're going to take the stagnation every time. That's why I say, paradoxically, the Japanese scenario of a lost decade might be a good outcome compared with the Great Depression 2.0 scenario.
But the difference this time around is there are other countries out there that are growing. What does that mean? That China and India will probably have some reasonable growth rates despite all this?
Well, that's the hope, but I'm not 100% convinced that this is going to work out. Notice also that the stock markets of countries like China, not to mention India, Russia and Brazil, the BRICS, they're dropping like bricks right now, with sell-offs far in excess of what we've seen in the United States. So I think there's a question mark over whether China and these other rapidly industrializing countries can keep the world going. They're still much smaller economies than the United States. If the US consumer goes on strike, then I don't really see how the BRICS are going to substitute. They're nowhere near big enough, and their consumers are nowhere near rich enough.
But wouldn't you say that in this scenario, which you're describing, which is very scary, the mistake would be to err on the side of caution, and therefore wouldn't it make sense to have a very, very large stimulus program of some kind?
What worries me, Fareed, is that each country is going about this in its own way, in an almost uncoordinated way, despite a G20 summit in Washington. It's as if everybody's dusting down their copy of Keynes's general theory and embarking on a national stimulus package, just in the same way that each central bank is heading towards a 0% interest rate, but at its own pace. The thing that worries me is that we seem to be forgetting how globally integrated the world economy now is. Each national action has an international reaction, an international consequence.
Such as, play that out. So suppose we had a $1.5 trillion deficit. Yeah. You're suggesting there's a problem because somebody has to buy this debt.
Right. Well, we've been confidently assuming that the rest of the world will continue to make its savings available to finance our current account deficit, which isn't about to disappear overnight. Even if it's only a large federal deficit, a large government deficit, the money has to come from somewhere, and $1.5 trillion is serious money in anybody's book. I mean, this is somewhere close to 10% of US GDP. Now, the savings are out there in the surplus countries right now, but if the Chinese decide they'd rather deploy their resources into growing their own consumption, I don't see how they can simultaneously buy $1 trillion of freshly printed 10-year treasuries.
So what happens? Suppose we start running these deficits. The Chinese don't want to buy a U.S. debt. Our interest rates have to start going up dramatically.
Well, we could see a sell-off, exactly, in the bond market. The price of US bonds could go down. We could then, therefore, see the yields go up. And suddenly you're looking not at a 3.5% rate on the 10-year, but something much higher. The other problem is, of course, in the currency markets. We're assuming that the dollar will be the international reserve currency for the rest of time. But that's no way a historical lesson. It seems to me clear from the experience of the British currency that reserve currencies aren't forever. They're not like diamonds. And at some point, questions are going to be asked about how far the American currency really is the most reliable currency.
What is the backstory of what is going on now? When people look back 50 years, 100 years from now, and they watch the United States in this extraordinarily vulnerable position because of all this debt, somewhat true of Western Europe as well, perhaps in some ways more true, and they watch China with $2 trillion of surplus savings, with a budget surplus, growing, it's still for the most part robustly. What will they say about the trajectory of these countries?
I think they'll look back and say, you know what, there was actually one country at the heart of the global economy in the early 21st century, and it was called Chimerica, China plus America. And these two economies were symbiotically linked. They were intertwined with one another. China did the saving, America did the spending. You know, China made its funds available through currency intervention. The United States took the money and piled on the debt. And this worked pretty well for nearly a decade. It took us from the Asian crisis of 97-98 right down to the American crisis that began in 2007. The question that historians will grapple with, and this is the thing that fascinates me now, is whether or not Chimerica was able to survive this crisis. If China and America continue to interact economically, then it seems to me we're in with quite a good chance of avoiding another Great Depression.
So if the Chinese, in a sense, you mean the Chinese have to save America in this crisis?
Well, somebody has to finance all of this borrowing, and somebody has to make sure that there are still markets for Asian exports. There is a reasonable argument for saying that the Chinese will continue to buy 10-year treasuries and other dollar-denominated securities in order to maintain the global trade that goes on between China and the rest of the world. But there's an alternative that they can choose. They can say, market socialism in one country. We're going to focus on our own resources, our own consumption. We're going to say goodbye to the world market and revert to being a rather introverted middle kingdom. It's happened before in history. It wouldn't be the first time. Now, if that happens, it's the end of globalization. If Chimerica turns out, if you'll forgive the pun, to be a chimera, then we really do risk being taken back to something like the 1930s. Because remember, the key to the Depression wasn't just the banking crisis or the stock market crash in the United States. It was the breakdown of globalization as a result of protectionism and a collapse of international trade. That's what made the Depression so protracted and so deep. And my worry is that we could inadvertently allow the same kind of thing to happen if there isn't adequate coordination between Washington and between Beijing. That's the key relationship that future historians will talk